All right, welcome to today's Explainer. We're jumping straight into day 18 of the Crypto Trader syllabus. And today we're actually putting the charts aside for a second. Look, you know the drill. You can spend hours, days even, perfecting your technical analysis, drawing those pristine Fibonacci retracements, mapping out impenetrable support lines. But honestly, all of that hard work goes completely out the window the literal second a candle turns violently red and the panic sets in. So we really need to unpack something far more volatile than the market itself, and that is our own minds. We're going to break down the psychological traps that can absolutely destroy a carefully built crypto portfolio if we aren't paying close attention.
Okay, let's dive into our roadmap for today. We're going to journey from understanding our inner demons to achieving true trading mastery by hitting 4 key areas. Number 1, the core emotions. 2, 3 destructive actions. 3, the mind trap. And finally, 4, mastering your mind.
So let's kick things off with part 1, the core emotions. This right here is where we establish the absolute baseline of trading psychology. Because almost every single poor decision made in the live market usually stems from 2 foundational, deeply opposing emotional extremes: fear versus greed. Let's start with fear. Now, we're not just talking about a mild worry here. This is the sheer, paralyzing panic of losing your capital. It's that awful anxiety that makes you market sell at the exact bottom of a flash crash, just because crypto Twitter is suddenly screaming that the coin is going to zero. And then on the other extreme, we have greed. This is that endless, unquenchable desire for more profit that completely blinds you to escalating risks. It's that little voice in your head refusing to take profits at a 300% gain because you are absolutely convinced. No, you know it's going to hit 1,000%. Take a second right now and honestly reflect on your own recent trades. Which of these 2 extremes was sitting in the driver's seat during your last big loss? Because recognizing these core emotions, well, that's step 1 in taking back control.
Moving right along to part 2, 3 destructive actions.
Let's look at how those foundational emotions, fear and greed, actually manifest. Because, let's be real, they don't just sit quietly in our heads. They inevitably explode into frantic, highly destructive habits out there in the live market. First up, and definitely the most famous, is FOMO, the fear of missing out on a profitable trade or a sudden market movement. We've all been there, right? It's that visceral, panicked feeling right in your chest when you're watching a chart suddenly print these massive green candles. The price is spiking, everyone on your timeline seems to be making life-changing money, and you're just sitting on the sidelines. But here's the really fascinating insight into why our brains do this. FOMO is basically our evolutionary, tribal herd mentality kicking into overdrive. Our brains are literally hardwired to believe that if everyone else is running in one direction, they must know something we don't. That deeply ingrained biological fear of being left behind by the tribe pushes us to abandon our carefully laid strategy and jump in at the absolute worst possible moment, which is usually right at the local top. And then there's revenge trading. This one usually rears its ugly head right after you take a sudden, significant loss. Your ego is bruised, you've got that pit in your stomach, and instead of just stepping back and closing the laptop, your brain is screaming at you to immediately win back that capital. You rush. You aggressively crank up your leverage on some completely random coin just to get back to even before you can even think about going to sleep. It's essentially a biological fight-or-flight response where logic just completely shuts down. You force a brand new trade, desperately and frankly irrationally trying to instantly undo that market loss. There's no strategy here. There's no analysis, just pure reactionary speed and a total abandonment of logic. Which leads us directly into the third trap: overtrading. This is when you're executing just an excessive number of trades, driven entirely by those frantic emotions rather than a calm, calculated strategy. It's this desperate need to constantly be in the market, doing something, producing something. But this frantic clicking of the buy and sell buttons, it just gives you a false sense of productivity. It isn't just about the losing trades themselves either. It's the friction of trading fees, the slippage, and the sheer mental exhaustion that just bleeds an account dry. You end up ruining an otherwise solid portfolio, not with one massive blowup, but through 1,000 tiny cuts.
That brings us to part 3, the mind trap.
Let's slow the pace down for a second here. We've seen the chaotic actions. Now we arrive at the most dangerous cognitive blind spot of all, mainly because it operates totally quietly in the background. Have you ever found yourself in that situation? You know the one, where the chart is screaming danger, the macro environment is terrible, and yet somehow you convince yourself that buying in right now is a genius, contrarian move? What is actually happening in our brains to allow that level of self-deception? Seriously, why do we ignore the blazing warning signs when trading? Well, the answer to that comes down to one really powerful concept: confirmation bias. This is our tendency to search for, interpret, or favor information that specifically confirms our pre-existing beliefs or our emotional urges. If you have a raging case of FOMO, you will literally scroll past 20 blatantly bearish indicators, completely ignore terrible volume, and skip right over negative news just to find that one guy on a forum saying it's a bull flag. And then you'll use that single piece of flimsy data to completely justify your trade. Your brain actually tricks you into thinking you're being highly analytical and doing your research when really you're just looking for a convenient excuse to feed your greed or your fear. It's the silent mechanism that validates all of those erratic, destructive behaviors we just talked about.
And that leads us to our final section, Part 4, Mastering Your Mind.
So the crucial point here is finding a way out of these traps. And that's really the ultimate goal of Day 18 in the Crypto Trader syllabus. It's about finding the exact tool needed to conquer these psychological hurdles once and for all. And that tool, it's discipline. We're defining discipline as the ability to control one's emotions and strictly follow a predefined trading strategy. Now, I know discipline can sometimes sound like a generic, overused buzzword, but discipline isn't about having a strong, unbreakable personality. Actually, scratch that. It's more like creating systems that protect you from yourself. Look, professional traders aren't emotionless robots who never feel fear or greed. They absolutely do, but they rely heavily on predefined rules to systematically override those emotions. Discipline is the master trait absolutely required to silence greed and break through that confirmation bias. Without it, your trading strategy is honestly just a meaningless piece of paper.
But listen, discipline isn't something you just magically switch on overnight, right? It takes active practice and conditioning. So Day 18 provides a very specific, practical assignment to build this vital trait. Create a trading psychology journal. And there's actually real, hard science behind why journaling works so well. When you're caught in a bad trade, your emotions are being processed by the amygdala. That's the primitive, highly reactive part of your brain. By forcing yourself to articulate those emotions and write them down on paper, you physically move the cognitive processing away from the emotional center of the brain and into the prefrontal cortex, the logical, analytical center. You are literally forcing your brain to calm down and think rationally. It's a real game changer.
So when you actually build this journal, you need to use it to actively track your mind. You're going to log instances of FOMO, monitor your greed and fear levels, note any urges for revenge trading, and constantly check yourself for confirmation bias. And when you do this consistently, you start to notice some really incredible patterns. Maybe you realize you almost always revenge trade on Friday afternoons. Or maybe you notice your FOMO aggressively spikes right after checking social media. This journal isn't just a diary about your feelings. It's an essential data-gathering survival tool. It helps you track, analyze, and neutralize those exact psychological pitfalls before they ever have the chance to bankrupt your account.
Which brings us to the end of today's explainer. But before you ever click buy or sell again, I want you to step back, take a breath, and deeply ponder this question. Are your decisions driven by discipline or by your inner demons? Take a beat. Be honest with yourself. Because the answer to that question won't just determine the success of that one single trade, it's going to determine your long-term survival in this market. Thanks for joining me to unpack Day 18, and I will see you in the next explainer.